In this video, we are going to talk about contingent assets. We'll have a look at the definition and go through an example. Going back to the basics, the definition of an asset. It's a resource controlled by the entity, and it will give us future economic benefits as a result of past events. Now we'll look at something called a contingent asset. The word contingent means that it depends. It depends on something happening in the future. Since it depends on the future, it makes it a possible asset. It depends on future events, and it's not controlled by the entity. Looking at the definition of a contingent asset, now you can see how it doesn't satisfy the definition of an actual asset. However, having a possible asset may still be useful to a user of an entity's financial statement. But because it's not an actual asset, we have to treat it differently. Now we'll look at the flowchart on how we treat contingent assets. If we know for sure, for certain, that there will be an inflow of economic benefits, it wouldn't be classified as a contingent asset because it's not a possible asset. It's virtually certain, so we'll record it as an asset. If the asset is probable, meaning it's likely but not certain, it wouldn't be classified as an asset, but we'll disclose it as a contingent asset in the notes of the financial statement. Lastly, if the chances of the inflow of benefits is remote, meaning it's highly unlikely, we won't recognize it as an asset, and we also won't disclose it. Now we'll look at a quick example and apply the flowchart. A lawsuit filed by ABC Limited against a competitor for infringing on their patent. Lawyers advise that there is an 80% chance ABC Limited will win the lawsuit. From the case facts, we know that the lawsuit is still ongoing and there is an 80% chance of winning. So there's still a 20% chance of losing, so it's not virtually certain. So we should not recognize it as an asset. Since lawyers advise that there is an 80% chance of winning, it wouldn't be remote. It's not highly unlikely, so this wouldn't apply to the case. Lastly, probable but not certain. The chances of winning the lawsuit is greater than 50%, it's 80%. But it's not certain, there's still a 20% chance of losing the case. As such, it wouldn't be recorded in ABC's accounts until the lawsuit is settled. However, ABC could prepare a disclosure stating that it has filed the lawsuit, but the outcome is uncertain. I hope you now understand the basic concepts of contingent assets.